The way that the interest rates should be a function of supply and demand, of saved capital. And they're not. They're set by a central planning committee called the Federal Reserve, which is just stupid. I mean, it's not free market. I mean, our kids are going to think we're nuts that we did this. And so, basically the market price of all these things should sort itself out if they were free markets, but they're not.
Mhm.
We're not going from 3,400 to 3,000. We're going from 3,400 to 4 to 5 to 6 to 7, now, which is not to say there won't be corrections along the way. I mean, could we go from 3,400 to 3,000? Absolutely.
Mhm.
We could go back to 2,800, but I don't think we'll go below that. But in a seesaw fashion, I mean, gold, all bull markets try and shake off as many riders as possible. So most people should be aware about the time they feel like they got to own it. Well, then there's going to be a correction. But, if you take a long view on this, I think we're going much higher in both of these.
Hey guys, welcome to Everyday Finance. Some of the first Bitcoin whales are finally getting rich. They've turned a few $1,000s into billions of dollars and are buying yachts, mansions, and other real estate. But even though they are expanding, the bigger chance may still be ahead of them. For many, Bitcoin's next 10x move is just around the corner. As always, September is a wild month. Analysts think the price could go up to $125,000. But they also say it could go down to $100,000. ETF flows show how fragile this is. Spot Bitcoin ETFs are losing money, but Ethereum ETFs are getting more. This suggests that money isn't leaving crypto altogether, but rather moving into ETH because it's seen as useful in the short term. Big events make things less certain. The markets are looking at the US jobs report and the Fed's rate decision. If you loosen up, risky assets and flexible assets would benefit. But if you tighten up, they might lose value. These factors keep the level of volatility high. Lepard points out this doesn't mean that they have lost their faith. They still think that Bitcoin can go up 10 times in the long run. The lesson for people who are patient is clear. Things may be noisy in the short term. The structural case for big upside is still there.
Probably the Fed is. Yeah, it was. I was shocked that they issued that paper. I don't, those guys might have gotten fired. I don't know. The whole issue of gold revaluation is a fascinating one. I mean, Miran wrote a paper about this. Trump has said things like he who has the gold makes the rules. Besant has said things like, we need a new Bretton Woods agreement, which is the last one, and I want to be at the table when it occurs. Besant has said things like we have assets that we could sell and revalue, which, I view as being the gold, even though he denies it. I'm sure it is. It appears to me that gold revaluation is kind of on the table and part of the discussion. I think the administration understands that we need a neutral reserve currency and that the system we've got has hollowed out our manufacturing base. And where that's become particularly acute is in these wars and how quickly we're burning through munitions and we can't replace them.
Mhm.
And now, of course, we've all read the stories about how we need all these rare earths that only China produces. And so we're going to put tariffs on China, and China's like, yeah, that's fine. We're not going to sell you any rare earths.
Mhm.
Ford's like, hang on a second, I need those to build my trucks. And China's like, well, all right, we'll let you have them for the trucks, but we're not selling the rare earths that you guys are using in weapons. And so, the Pentagon, the CIA, the administration, I think really understands the dilemma we've gotten ourselves into and that we've got to return to a neutral reserve currency. And I'm sure they've had conversations about a reset of gold and maybe about a reset surrounding Bitcoin. But, whether or not they've got the courage or they feel like there's the political space in which to do it, I mean, sadly, I think it's probably pretty thin. I think, I don't know though. I mean, Trump is bold and he's done bold things so far, and maybe he'll do a bold thing like a gold reset. I mean, the problem is, the gold's carried in the $40 an ounce range, today, and if they reset it to today's market, it add like $1.5 billion or $1.5 trillion to the TGA. That's just not that much. I mean, to really make it work, they'd have to go to 10 or 20,000 an ounce or higher. And whether they're going to do that or not, who the hell knows? I mean, obviously, if they do, those of us who've invested in the metal, invested in the mining companies, we're going to be, silly rich. Of course, they'd probably put in a huge tax rate on that kind of stuff. But anyway, it's a different matter. But the gold reset thesis is interesting because if you read the tea leaves around the discussions that have been had, there's no doubt that they're considering and thinking about going in that direction. Whether or not they will pull the trigger, I don't know. I think we will ultimately get to some kind of a reset like that, but I think that's more likely to come after a period of very, very high inflation where everyone is screaming about the inflation. And then they can justify it. Then they can say, yeah, you're right. This inflation really is a problem. And here's how we're going to solve it. We're going to do a reset. Mm-hmm. Right. And that, to me, that's the most likely time frame. So that's part of why Trump wants to get rates down, run inflation hot, run the economy hot. Everyone's got a job, but inflation's cooking, and then right before he leaves office, because he's probably afraid he won't be reelected, they reset it, right, to try and get things back under control. I don't know. That's just one thesis. Mm-hmm. Like the magic $1 trillion coin. I mean, it's mechanical. They just print the money and put it in the account.
Right.
Right. So, but if they want to make it hold at that level, as Groman has pointed out, and as I agree with him on, they would have to say, okay, we stand ready to buy and sell an ounce of gold at $20,000. Mm-hmm. You bring in $20,000, we'll give you an ounce of gold. And in turn, you bring in an ounce of gold, we'll give you $20,000. I mean, they would have to make a market in gold, literally. And then what they would see is, did they get inflows or did they get outflows? And what that would tell them is, is 20,000 the right number? Mm-hmm. Right? If it's $20,000 and everybody's giving them gold and getting the dollars, well, then they set it too high. But if it's the other way around, if everybody is saying, give me the gold. Here's your $20,000. Give me the gold. Well, then they set it too low, right? Some people will. I mean, if it turns out that some people will. Some people will say, hey, Jesus, I got that's a lot of money. I'll do it. I mean,
but it's more of a comment on what is the dollar really worth at that point.
Well, that's right. That's right.
The value of the dollar,
and it does. But again, and by the way, it'll be massively inflationary when they do that. But it's a one-time thing, and you've returned to sound money. I mean, chapter 22 of my book talks about this. I mean, we need to do a reset, right, Tom? We've got way too much debt. We've relied on this broken Keynesian model. The way that the interest rates should be a function of supply and demand, of saved capital. And they're not. They're set by a central planning committee called the Federal Reserve, which is just stupid. I mean, it's not free market. I mean, our kids are going to think we're nuts that we did this. And so, basically the market price of all these things should sort itself out if they were free markets, but they're not. Mm-hmm. So in my quarterly report that you referred to, you can see that there's some real serious demand coming in out of China and Asia. I mean, those people, they love gold and they've been seriously demanding. In the US, the ETFs have been pretty dormant. There hadn't really been much demand, and it's starting to pick up. Mm-hmm. You're seeing signs. I mean, Costco had gold bars for sale, and usually when they get them in, they sell them out pretty quickly. I mean, I think, I've had a lot more inquiries about friends. How do I buy gold and so forth? So, I would say that we're starting to see a broader interest in gold, investment managers, et cetera. So yeah, it's clearly coming, but it's not at the point where the shoeshine boy is recommending gold or gold stocks. Do you know what I mean? I mean, it's still very obscure, and there aren't, other than guys like you and me and people who listen to podcasts like this, most of the world doesn't get this, still. So we got a long way to go.
After the latest rise in inflation, Fed Chair Jerome Powell is trying to make it look like the problem is under control. Many people are expecting him to shift his attention to jobs and maybe even hint at a small rate cut. That's important for both stocks and Bitcoin, since lower interest rates tend to encourage people to spend. But soon-to-be-released economic data could quickly change those predictions, which keeps traders on edge. Big Bitcoin users have sold a lot of their coins, but prices have stayed the same at $110,000 to $120,000. This means that money is likely going into Bitcoin treasury companies, which are public companies that are raising money to add Bitcoin to their books. Some whales are even taking on leading roles at these companies, which shows that people want to take advantage of Bitcoin's growth through businesses rather than just wallets.
And the fact that silver is now starting to confirm the move in gold, I mean, gold moved first and silver's following through, that's huge. I mean, I am so bulled up on silver right now, Tom. As I told you, I listened to your interview earlier, with Gary Savage. And, I mean, yeah, silver's going to 50, 70, 100, soon. And that's a big deal. And yes, I agree with you. I think psychologically, I mean, up until now, what people have been kind of saying is, well, the gold market's a bubble, and a lot of the analysts in Toronto who are following these mining stocks, oh yeah, it broke through 2070 to 2300, but it's coming back down to 2000. They had all their models built on 2000. Well, yeah, it made it to 2,800, but it's still coming back down to 25. Well, yeah, it made it to 3,200, but it's coming back down to 3. Well, yeah, it made it 34. Pretty soon they're going to say, holy shit, there's something bigger going on here. This is not coming back down.
Mhm.
We're not going from 3,400 to 3,000. We're going from 3,400 to 4 to 5 to 6 to 7, Now, which is not to say there won't be corrections along the way. I mean, could we go from 3,400 to 3,000? Absolutely.
Mhm.
We could go back to 2,800, but I don't think we'll go below that. But in a seesaw fashion, I mean, gold, all bull markets try and shake off as many riders as possible. So most people should be aware about the time they feel like they got to own it. Well, then there's going to be a correction. But, if you take a long view on this, I think we're going much higher in both of these. I think that's right. I mean, I think, I hesitate to say it's different this time, but I think there are fundamental underlying drivers here that you need to understand to recognize that this is going to go further than people think, and it's been a long time coming. And by the way, some of these charts are just absolute things of beauty. I mean, you look at the silver chart;
Mhm.
it's just a long, rounded bottom with a cup and a handle, and now a breakout. And I mean, $100 is like falling off a log. I mean, it could go to much higher than that. So, and by the way, I mean, most of the companies I own that mine silver, I mean, the cost to mine was $20, $25 an ounce. $32, they were kind of getting by. At $100, they're going to be making some profit. I mean, to tell you, right? I mean, it's going to be, their costs will go up, by the way, because there's inflation on all their inputs. But they're not going to have inflation of 500%. They're going to have, or of 100%. They're going to have modest inflation, and the price of the metal they're selling is going to go up, 2x or 3x. So what this chart is, and I'll just describe it for people who are listening on the radio. This is a chart of the price of gold compared to the Huey Gold Stock Index, the broadest index, starting in early 2001 going to present. And what you can see, there was a bull market from 2001 to 11, and then there was the bear market, and then there's the bull market that started kind of in 2016, and we're in it still. And what you can see back in the one from 2001 to 2011 is that gold went up, but the stocks went up even more. And that's because they represent streams of gold, and gold just sits in a vault and doesn't reproduce. What you can see from the bottom in 16 to the present is that gold has gone up quite a bit, and the stocks, the response of the stocks has been quite muted. They've underperformed gold in terms of appreciation. And so there's a big kind of alligator jaw difference between the price of gold, which is at 3,400, and the Huey, which is at 400-ish. And so my expectation is that as people come to realize that prices are going to go much higher in the gold market, these stocks are going to catch up. And the stocks are still looking in the rearview mirror thinking, oh, this gold price isn't going to last. But once they realize it's not only going to last, but it's going to go to 5,000, there's going to be just a very aggressive and massive move in these stocks. And so I am really, really bulled up. My fund is probably up to 70% so year to date. But honestly, from where it is right now, I sincerely believe it could double in the next 12 to 18 months. I think it will. Mm-hmm. And that's just because of the catch up. These gold and silver stocks have really lagged the underlying movement in the price of the metal. And I'll tell you one of the reasons for that, I mentioned this before, is that this used to be the only way to play alpha on monetary debasement was gold stocks. Gold would go up and the stocks would go up more. So everyone wanted to make more than just the price of gold going up. They buy gold stocks. Well, that's not really the case anymore because Bitcoin exists. So if you look at gold stock investors, they're generally over 40 or 50 years old. And so all the young people, they're not buying gold stocks. They're like, screw that shit. I'll just buy Bitcoin. Mm-hmm. I understand that argument, but it means that there's less interest in these things than there used to be. But all the same, I mean, the big pools of money. I mean, right now the entire gold stock market is about $500 billion. In the context of a stock market of closer to $50 billion or $50 trillion of value. So, it's like 1% of the total value of all the stocks outstanding. And so, what's going to happen here? I mean, these people, these algorithmic traders, these algorithmic managers and others. They're going to look at like my report, and they're going to say, hang on a second. You mean to tell me the S&P went up 6% and gold stocks went up 50% in the first half of the year? Shit. Why don't I have any of those? Mm-hmm. I mean, and that doesn't mean they're going to sell all the S&P and go buy gold stocks, but it means they're going to go from a 0% allocation of gold stocks to a 4% allocation. And, that 4% is not a small amount of money given how small the market for gold stocks is, if you see what I'm saying. So, I'm extremely bulled up on where this is going, in the next year or two. Now, having said that, there will come. I mean, you want to rent these stocks. You don't want to own them over full cycles because at some point in time, they will become overvalued, and the price of gold will stop going up as much. And so, there comes a time to sell them too. But we're not anywhere close to that. I think in my report I said it's a 9-inning game. We may go extra innings, and I think we're in the third inning. What could go wrong? That's a good question.
What could derail this bull market for a meaningful amount of time, not just a short correction?
Yeah. Well, I mean, look, a total economic collapse, kind of a la a 2008. I mean, and I don't know what you define as short, but in a real liquidity crunch wherein they don't respond by printing money, everything's going down. Just everything is going down, kind of Great Depression style stuff. In which case, even the price level is going down. You have deflation, and in which case owning cash is your best bet, or government bonds that you can get the principal back. I have made the assumption that in a democratically run system like the one we have, the Federal Reserve will never allow that to happen. They cannot allow that to happen. But that still doesn't mean it can't happen. So, I mean, in 1929, what you wanted to have was cash because, in 3 years later, you could buy everything that was out for sale before for 10 cents on the dollar. I mean, I had a grandfather who bought a house for 30 cents on the dollar, because the housing prices collapsed 66%. So, so massive depression, a bursting of a bubble followed by massive depression could hurt all of us who are long anything. I'm making the assumption that the policy response would never allow that, and or would likely lead to massive printing, which would then lead to massive debasement, which would then lead to these things being the new form of money. So that is an assumption I'm making. But if I'm wrong about that, you want to hold cash or bonds. So I mean, but even the bonds, the government bonds probably won't default, but other bonds might. I mean, the nice thing about gold is it's cash that they can't see. It's cash they can't take away from you. And I think, honestly, I think the price of gold would hang in there pretty well, even in a depression.
It is said by Larry Lepard that the Bitcoin bank companies' multiple on net asset value (MNAV) is usually between 1x and 2.5x. When MicroStrategy's MNAV hit 1.2, it got a lot of attention. It also had a clear long-term plan. It increases its stakes through convertible notes and preferred shares. It has more than 600,000 Bitcoin and better access to capital markets. Due to short hedging, notes can limit stock gains. Preferred shares, on the other hand, avoid dilution by giving income that is linked to the price of Bitcoin. Other proxy companies are popping up around the world. Metaplanet borrows yen in Japan to buy Bitcoin. This creates arbitrage and gives Japanese buyers a chance to make money. Brazil, Canada, and the UK are all starting to use similar models. These countries are all benefiting from regional rules and easy access to capital. Their MNAVs can only go as high as their leadership, ability to raise money, and ability to place themselves in the market. MicroStrategy wants to keep being the market leader. While companies like 21Co want to grow by offering new goods like Bitcoin-backed loans, the next step could be for companies with lots of cash to buy Bitcoin directly, which would mark the end of financial engineering and the start of real business adoption.